Welcome to the Explainer. Look, consider this your exclusive strategy session. We're going to take a hard, data-backed look at the reality of average finances today. And more importantly, we're building a definitive playbook for you, the young professional, to completely break away from the pack.
So let's just dive right into it. Have you ever actually wondered if you're doing better or maybe worse than everyone else when it comes to your money? Today, we're going to absolutely shatter that illusion of normal you see plastered all over social media and reveal where you actually stand. Because honestly, most of us have no clue what average truly looks like.
Here's the game plan for today. We're covering 5 key areas: the average financial reality, net worth benchmarks compared, crushing credit card debt, trimming monthly household spending, and finally, the young professional's playbook. We're taking some pretty alarming statistics and turning them into an empowering, step-by-step action plan.
All right, Section 1, the average financial reality. We're peeking behind the curtain of normal here because, well, we usually just assume everyone else has it all figured out. But spoiler alert, the data paints a very different picture. Take a look at this number, $65,000. That right there is the median amount Americans have saved for retirement. Now, at first glance, maybe that doesn't sound terrible. But here's the shocker. 25% of Americans have absolutely zero saved. Zero. That means 1 in 4 people are planning to rely entirely on Social Security. Just imagine working your entire adult life, grinding away, only to hit the finish line with an empty tank. But let's translate what that data actually means for your day-to-day life. Even if you hit the older demographic average of $88,000 saved by age 65 and you follow the standard 4% withdrawal rule, that only gives you $300 a month to live on. Think about that for a second. Could you survive on $300 a month for groceries, utilities, and healthcare? No way. Which brings us to Section 2, net worth benchmarks compared. Let's figure out where you actually stand. We're going to see how your overall financial health stacks up across different age groups. And just as a quick reminder, net worth is simply everything you own minus everything you owe. So if you're, say, 23 and just kicking off your career, seeing that the under 35 net worth is a mere $14,000, that shows you exactly how incredibly low the bar is to beat the average. It's practically on the floor. Even as folks reach their mid-40s, the median is still just $91,000. These numbers are highly, highly achievable to beat if you just exercise a little bit of discipline right now, early in your career. Moving on to Section 3, crushing credit card debt. This is the elephant in the room, guys. It's the ultimate wealth destroyer in today's economy, high-interest debt. If we're going to build a real, functioning financial playbook, we have to confront the exact thing that's keeping that average net worth so incredibly low. Get this, the average household is carrying over $9,000 in credit card debt. And let's be real with each other. This isn't debt for an appreciating asset like a house. Nope. This is mostly from stuff we don't actually need. We're talking dinners out, those late-night online shopping sprees, or, that really expensive hobby you completely abandoned after exactly 2 weeks. We've all been there. So here's the absolutely crucial takeaway. Paying this off in full has to be your number one financial priority. Yes, even before investing. Actually, think about it. There's literally 0 point in celebrating a 7% return in the stock market if you're simultaneously throwing away a massive 20% in interest to the bank. The math just does not work. We've got to stop making credit card companies rich and start paying ourselves. Okay, so with the debt out of the way, Section 4 is trimming monthly household spending. We're targeting what we call the big 3 expenses. Out of the typical $5,577 of average monthly household spending, let's track where that cash is actually flowing. Just look at how much of this pie chart is already spoken for before you even attempt to save a dime. This brilliantly illustrates exactly why you might feel broke all the time. Housing, transportation, and food are just eating up the vast majority of your take-home pay. I mean, housing alone takes almost $1,900 a month. Transportation eats up over $900. When you combine those, there is very, very little left over to actually build your wealth. But by applying 3 specific daily habits, you can easily free up thousands of dollars a year from those exact categories. First up, practice daily checkout mindfulness. Basically, wait 24 hours before buying anything non-essential. Just sleep on it. Second, bring your lunch and coffee to work instead of making those super expensive daily cafe runs. And third,
Just say an automatic no at the register every single time they offer you a store credit card discount. It's a trap. Don't fall for it. All right, finally, Section 5, the Young Professionals Playbook. This is how you beat the average. Now we're pivoting to the solution, building that financial action plan so you can just step right over that low bar we've been talking about. Look at this comparison. On one hand, you have the average 6% savings rate, which basically leaves you crossing your fingers and relying on Social Security. On the other hand, you have the ideal strategy, saving 10 to 15% or even more to secure true early retirement. Get this, the average American retires at 61, but they can't draw full Social Security until 67. That creates a massive, frankly, terrifying gap. But you, as the ideal young professional, you're going to take control of your spending and invest heavily right now, so you literally never, ever have to worry about that gap. So here is your step-by-step action plan to win. Step 1, pay off that 20% credit card debt immediately. Just crush it. Step 2, keep your living expenses, especially those big 3 we talked about, far below what you actually earn. Step 3, supercharge your savings beyond that 15% mark, specifically earmarked for retirement. And step 4, invest consistently and let the absolute magic of compound interest and low-cost index funds do the heavy lifting for you. At the end of the day, you really have to ask yourself, do you want to be normal or do you want to be better? Because you absolutely deserve to retire with far more than $300 a month. You deserve the peace of mind that comes with having your financial house in order. Use these average statistics not as an excuse to just coast, but as fuel, as your motivation to build a truly exceptional financial future. But here's the ultimate question I want to leave you with. Once you've actually beaten the average and built all that wealth, what exactly are you going to do with your newfound freedom? Think about it. We'll see you in the next explainer.